Hi, welcome back. You're still watching Trading Hour. For the market, we've seen a little bit more of a slip, so it's currently around 75 points lower on the Nifty. We're seeing around 0.5% of a cut, and the Nifty Bank also slipped a little bit more with a loss of around 0.9%. So let's invite our market guest on the show now. Sunny Agrawal of SBI Securities joins us to discuss the some of his top trading bets as well as his outlook on the market. Sunny, good morning, and thanks a lot for joining us. This is Pavitra. You know, what we have been discussing is the resilience of the Indian market, the fact that we have outperformed significantly compared to what's going on in the rest of the world. But normally this is something that, can't last for a very long period. Do you think that this is something where this outperformance could perhaps not be too long-lived and we might see a catch-up? Sunny, I think you're on mute, so I request you to...
Yeah, am I audible?
Yes, please go ahead.
Yeah, so you have rightly pointed out that Indian market has been quite resilient as compared to the relatively as compared to the other developed and emerging markets. So few things which has played out for Indian market is that relatively a stable currency as compared to the other developed or emerging market currencies. At the same time, there has been a softening in commodity prices, which has played out well for the Indian economy. But post-Fed meeting, we have seen a rupee galloping from 80 to 82 levels. And today itself, the rupee has hit a new all-time low. So it's a kind of mixed set of, factors which are playing out for Indian economy and Indian market per se. So we are cautiously optimistic on Indian equity markets. Anyway, with the result season kicking off from 10th of October, so the market will become a stock-specific or sector-specific market. And on a broader side market, we expect market to trade in a very broad range of maybe 16,500 on the lower end, wherein it finds a comfort on valuation trading at 16, 17 times FY24 price to earning multiple. And on a higher end, we expect the market to be levels to be capped at around 18,000 levels.
Sunny, in terms of the Q2 earnings season, what is it that you expect on an aggregate basis? Because the EPS for metals, oil and gas is likely to come under pressure due to the lower prices as well as the hit to OMCs given where crude prices are. But X of that, the numbers are expected to look pretty good on a low base. So what is it that you expect?
So in terms of earnings season, which is going to kickstart from 10th of October, for IT sector, we expect Q-on-Q growth of 2.5 to 4.5% for the tier 1 companies like TCS, Infosys, SCL Tech and TechM. So in terms of margin, we feel that IT sector margin for the tier 1 companies have bottomed out in first quarter. So in second quarter, we may see a margin expansion on Q-on-Q basis between 50 to 80 basis points. The commentary in terms of the demand outlook, especially looking at a recessionary narrative which is going on in the US and Europe. So demand outlook is likely to be tracked by the street. At the same time, what is the outlook on attrition and wage? So that's the so overall we feel that IT sector, the froth in terms of valuation has come off. So downside is limited, upside is subject to the outlook which the companies will deliver over next few days. So this is on IT sector. In terms of volume growth or in terms of auto, we feel that the volume growth has been very healthy for passenger vehicle and two-wheeler companies like iShare, for that matter, Maruti. So in auto, again, it will be a mixed bag kind of result, wherein we feel that companies like Maruti, iShare Motor, TVS, they are likely to deliver a healthy number. So on auto side, we are positive on Maruti, iShare and TVS. In terms of banks, as we all have seen the provisional numbers which are coming from, whether it's a mid-cap bank or large banks like HDFC banks. So all those banks are reporting a very healthy set of growth number in terms of deposit as well as the loan growth. So we feel there can be a NIM expansion as far as banking sector is concerned. So bank sector in terms of valuation also looks decently placed, and we feel that banking is as a sector is likely to outperform over next 3 to 6 months. So this is on banking sector. Yeah.
Sunny, any recent initiations, coverage on stocks, anything your team is putting out, focusing on?
So right now, defense is a sector which we find to be very attractively placed in terms of a very strong order book, very good growth visibility. So as a team, we are working on a defense as a sector. So we are recently we met with the management of Paras Defense, and the management is very bullish in terms of the, although it's a very small company, 2,500 crore market cap company, but the growth outlook with the even a smaller company looking at a healthy order book they are giving. So we feel defense as a sector is likely to be a sector which is likely to deliver healthy return, and our team is working on that.
Paras and anything else there? I mean, have you initiated? Yeah.
Paras, HAL, and Bharat Dynamics.
Paras, HAL, and Bharat. And Paras actually had that crazy move. I mean, in 2021, it went up to 1,300 rupees in that move, and things were actually going crazy. I mean, IRCTC, this one, I remember a bunch of others, from 1,300 to, straight down to about 500, and now about 600, 650. Bharat Dynamics is the other one. Sunny?
HAL.
HAL, okay. You've initiated coverage, formal coverage?
No, so right now, I mean, since the team size is very small, so
okay.
We have got a passive coverage. So active coverage is something we will coming out as the team expand over the next 2 to 3 months.
All right, Sunny, I also see some of the auto names make it to your top stock picks. So tell us how you would play the sector. Do you like the two-wheeler names? Are you looking at the passenger vehicle makers? And, this space has already seen quite a run-up. So do you think there's lots more steam left? Would you suggest putting fresh money to play even at these levels?
Yeah, so we are selectively bullish on names like Maruti, TVS, and Eicher. So for Maruti, basically, the two factors which are playing out is on one hand, there is a healthy demand in. So we have seen that order book of Maruti currently stands at around 3.5 lakh vehicles. And at the same time, the volume growth for the, July, August, September has been very healthy, pretty healthy for Maruti. On the other hand, the cooling off in metal prices will definitely lead to the margin expansion for the players like Maruti. So right now, the EBITDA margin of Maruti is in the range of 7 to 8%. And we expect this margin to expand to a low double digit, maybe 11 to 12% over next 2 years. So Maruti is the one of our top picks, and we recommend investors to deploy fresh money in Maruti at the current level also. And the similar story of margin expansion is playing out on in the TVS. And on the other hand, in Eicher, we have seen a very healthy volume growth in Royal Enfield as a portfolio. So that's one of the stock which we are recommending to investors.
All right, Sunny, we leave it at that today. Thank you very much for joining us and taking us through your call on some of these sectors. So bullish on some of the auto names, on banks and defense as well. But with that, we're going to get into a short break now. When we return, we line up and analyze all of the expectations from the large cap IT names in our special segment, Quarter Se Quarter Tak. Stay tuned.